Paul's prepared. All right, so what might happen here is it might come up, test this resistance right here, or coming back down. It might even come up and test this up here. Sorry guys, give me a second. I'm gonna make sure it's on YouTube. All right, we're good. All right, cool. So right here, what might happen is since it's inside this zone right here, it might come up, test resistance, or maybe even this resistance right here, before coming back down to the overall direction of price. Yeah, even though it might push up, I personally would only take buys, because the thing is, price can come back and reverse on you pretty hard if you're taking a buy, depending if the price wants to move in that direction. Especially with the new coronavirus news coming out in the US, it's affecting stocks like pretty heavily. As you can see right here, I mean, this is crazy right here. I know a lot of apparel brands and a couple other retail brands released their earnings, and it didn't look good at all. So that's why it dropped right here. And then if the US decides to extend the coronavirus quarantine in the US, then you can definitely see it dropping further. So let's see. Move on to 15-minute. So the resistance on here is pretty far off on the 15-minute. How many pips is that? Yeah, it's like 500 pips. I'll move on to 30-minute. Again. See what might happen. Also, because we're in Asia session right now, it might not push up that far. The indices move pretty slow during Asia session. So let's see, right now it's 16. So as you can see right here, this was Asia session. When was this? On the 10th, 2 days ago. Like price barely moves during Asia session. We're 16 again right here. So let's see how many pips it's moved yesterday. Yesterday it moved. It barely moved like 300 pips. So, comparing movement from yesterday, it's probably gonna move the same way. So 300 pips is only, let's give it some cushion so it can move in both directions. So, this is probably gonna be the range from now until London. So if anything, I'm not sure if you have the indicators, but if you do, you'll have these zones right here. Even if you don't, you can write these on your own chart just to have it a framework as what price is probably going to move from. So you can have the resistance set at 2855, or you can just put 2855, and then down here you can have 2840. So what's going to happen in Asia session is it's probably just going to consolidate within here. And not really move all too much. I don't trade S&P, so I don't know how much each pip is worth. Looks like the spread on my chart is only 4 pips. So I think 100 pips on S&P is actually a lot. So depending on what happens with these next candles, because if price stays within this zone right here, it's probably going to come up and test this zone. But if price comes down and breaks this support right here, then it's probably going to keep pushing down even further. So depending on what happens within the next hour or 2 hours, then you can determine which direction to trade in. I personally wouldn't take any buys, but if it keeps pushing up, what you can probably do is you can put a sell stop like right here at the low of the bullish candle, or right below the support, so that once price comes down, it'll automatically trigger your order, and you can catch a quick profit that way if you're trying to scalp it. It's kind of hard to scalp it if you don't have, the K2 indicators like I do here, because what I would tell you to do is you go on the 5-minute and then you can just scalp it moving down here. So when you get a sell signal, which looks like it's probably going to come up right here, then you could take a sell. So like right here, you get a sell signal, you could have taken the sell right here, and you would have put your stop loss at the previous swing, which would be somewhere right here, 83 pips. You probably round that to 100 pips. And then scalp it down like we did right here. So what I would do is if I was trying to scalp this, I would wait for sell signal like it did right here, and that's the same thing. But I'm not sure if you have the indicators to do that. So personally, if you wanted to scalp, I would use the K2 indicators to scalp. But if you don't, then personally, I don't see an entry, so I just wouldn't take this trade right now, especially not during Asia session because it moves so slow. But like I said, if this closes down it's got 20 minutes left on this candle. If this candle closes below the support and then it tests it and comes down further, then I would take it. Kind of similar to what happened up here. So as you can see right here, price came down, broke below the support, it shot back up, closed below, and this gave a valid entry right here, catch this move downwards. That's kind of what I see happening right here, because price, as you can see right here, price broke below the support like it did right here, and then it pushed back up like it did right here. It closed above it like it did right here, but the next candle closed below it. So as you can see right here, if this candle closes below the support, then you can probably see it come back down even further. I mean, it's a common pattern that happens all the time. Like you can see right here, price came down, closed below the support, came up with a bullish candle, closed back below. You could have entered a sell right here with your swing right there. So we could round that to 200 pips. Oops. 200 pips. 200 pips right there. And then you could have, made a 200 pip profit off there. Similar to what happened right here, same exact pattern. So price breaks below support, comes up to retest, closes below again. You can take an entry, quick profit. Again, right here, closes below, closes above, then closes below again, gives you a proper entry, quick profit. Similar to what happened right here. This wouldn't be the same pattern because the bullish candle never closed above the support to retest. It just retested it. But right here, price closed below, came up to retest, and then if this closes as a bearish candle like it did right here and like it did right here, then you can anticipate a drop from that point. So if that was to happen, then you'd have a valid entry. But right now, it's just consolidating, or it's within the zone right here. So unless you have a catalyst to take this entry, then I wouldn't take it yet. But I mean, there's a lot of ways to enter this trade. Like I was saying, you can put a sell stop right here and then catch the drop. Kind of similar to what happened right here. So right here it came down, a little bit of a bullish move right here, and then you could have had a sell stop set at the low of this candle right here. So once this came down, it would have triggered your order, and then you would have been in this trade. Kind of similar to what happened right here. So it came down, and then as it gives a small bullish push, you can put a sell stop right here, and then you catch the ride down. Similar right here, it came down, pushed up a little bit for a bullish move. You could put your sell stop right here, and then it would have caught the move down here. So I mean, there's a ton of ways to enter this trade, but personally, I just don't see an entry right now. So this would be a little too risky for you to enter. But if you do want to watch, this support area is going to be here. I'll give you the point so you can mark that on your chart. So this price point is going to be at 2840. So if you can see price break below 2840 with a bearish candle, then you can enter a sell. But personally, right now, I wouldn't trade. There's just no catalyst, giving you an indication that price is going to be coming down. It might just retrace up even further up to this resistance before coming down. But I'd be careful with indices in general, just because of all the news that's been happening. and being released, pretty much anything can really happen at this point. All right, next question. So let's see. We got Stanley. So Stanley wants to check out OddCAD. All right. So here we are with OddCAD. We still have this position open. This is one of the signals that I gave pretty far back. So let's see, on the 6th last week. This pair has barely been moving at all. So let's see how much it's moved since we entered this trade. So it's only been ranging about 40 pips both directions, 40, 50 pips both directions. But just looking at from a bird's eye view, it's definitely in an uptrend, but it looks like it's in a consolidation phase right now. So let's see. So if we were to draw some trend lines right here, it's sort of an uptrend, but it's, I mean, it's just moving sideways. So it's kind of in consolidation. That's kind of what I don't like about this pair, but this happens a lot with the odd CAD and a lot of the very similar pairs that are crossed with the Canadian dollar. But I do see it continuing on upwards. I just don't, there's just a lot of choppiness going on. And we don't have a buy signal right now, but it looks like one's forming. So I think once we have a buy signal, like if this closes as a strong bullish candle and it closes somewhere above here, or if it's, you know, a big full bullish candle, then we're probably gonna get a buy signal, and then we can anticipate, you know, some movement upwards. Because as you can see here, if I take the sell signals off the chart, you know, whenever it gets a buy signal, it usually pushes up pretty good. So like we got a buy signal pushed up right here, buy signal pushed up a little bit. But like I said, it just consolidates a lot. So right here, consolidated, but it did go upwards. It's like an upwards consolidation. It's not really, you know, straight shooter up. Right here, it kind of retraced back. This is where it went into some pretty heavy consolidation. This is like it's like a straight consolidation right here. So I do see it continuing upward. So Stanley, if you're still in this position from, I think you took it yesterday, I think you're still in a good position, but I probably would, once we get closer to, Aaron, do you know what time the news is again? 6:30, you said?
For NZD?
Yeah, no, is that NZD news?
It was AUD, I think it was medium AUD news, and actually it's high impact AUD news in 44 minutes. In 1 hour, just NZD news.
Well, you said there's high impact. There's high impact AUD news.
Mm-hmm.
Yeah. Okay. Yeah. The problem with AUD news is it affects it pretty heavily if it's, you know, depending if it's something important or not. I'm gonna try to see what the news is for. Let's see. So it looks medium on my chart. I think Aaron's looking at what are you looking at, FX Street or something like that?
FX on my FX book. Excuse me.
Okay. Yeah. So the news at 6:30 is, it shows medium on mine, but on my FX book it's high impact. So that might affect the market. What I would do, Stanley, if you're in this position, I'd probably move your stop loss and profit just in case, you know, a spike happens, because the news is going to come in about an hour. So within that time, I'd probably move your stop loss and profit. And if you get stopped out, it's fine. You can always re-enter. But it's better, you know, to get stopped out in profit rather than risking, you know, something happen like a crazy reversal, or, I mean, honestly, I don't know, anything could happen. So let me look at the, let's check out the IG sentiment real quick. So IG sentiment podcast. Let's see where all the traders are. So there's a lot of traders right here that are short. This actually might work out in your favor, Stanley, if you're in a buy, because there's 78% of traders are shorting OddCAD right now. So they're anticipating a drop. So they're trying to predict a drop that's going to happen, but it doesn't really look like it's dropping, because as you can see here, this was the previous high, and price has already broken that area. I mean, unless, you know, this whole area right here is going to be considered the high. It doesn't really look like it. But it looks like that previous candle right there broke it. So I think it's going to keep pushing on up. But that's a lot of traders. There's 78% of the odd CAD traders are shorting odd CAD right now. So they're hoping that price is going to come shooting down. Crazy. I don't know why there's so many people that are trying to short it when it's not even going down. It looks like they're anticipating a drop to come. But the thing is, like I explained earlier, since there are so many sellers in the market, if the market makers and institutions want to manipulate the market, they're not going to push it downwards in the favor of all the people because they're not going to make enough money that way. They're going to want to stop out, the 78% of the people. So what's going to happen is since they're shorting it, so if they took a short position, it looks like, let me see if there's another area where they would put their stop losses. No, okay, so let me measure this right here. So this is current price. And I don't even know who's shorting it. Like if you were to short this, they're like an automatic drawdown right now because it's been going up this whole time. So if they shorted anywhere around here, they're definitely in some drawdown, unless they shorted it from way up here, which I highly doubt they did. But what might happen is, since there's so many people shorting the market makers are going to want to spike price up. So what's going to happen is, so they shorted from this area. Depending on what type of trader is trading this position, their stop loss is 60 pips is a pretty far stop loss. So what might happen is they might spike price 60 pips up, stop all these people out up here, and then maybe drop it down. And then they might mess with people and then shoot it back up to stop everyone else out again. Because there's so many sellers in that area. When there's so many sellers that are trading one direction, or buyers, when there's so many people in one direction, that's what happens. Like if you look at the market, when you can like spot manipulation, let me see if I can find an area where that probably happened. So probably like right here. So you can see these big drops right here. So what probably happened here was, or let's see. So yeah, so there was news right here at this point in time. So it looks like, so this is usually what happens. So when there's a news release, like right here, there's a ton of news right here. What happens right here is if there's people selling, so as you can see here, there's let me just take these lines off. As you can see right here, this was, at this point in time, there was a bunch of sellers here because obviously price is trending down pretty heavy. So why would you buy right here? So what happened was when this news release was released, there's a ton of sellers here. What the market makers do is they spike price up like right here, and then they stop everyone out that's selling, right? And then what happens next is they push price back down because they want to give people a fighting chance. So what happens is people, once price spikes, people sometimes they'll remove their stop loss, and then just to avoid the spike right here. So what happens is they stop all these people out and they bring it back down to trick people that it's going to come back down because obviously the overall, so if we rewind this to this area, so if you're trading right here, would you buy? Probably not, right? So what happens right here is the news release happens, or the news happened way over here. So the news happened right here, and there was nothing over here. This was light news. So news happened here, it dropped. Obviously, people are going to be selling because it's in a downtrend. But what do? They trick people right here and they push price up to stop all these people out. And then what do they do after that? Once price gets pushed up right here and they see that there's still a super strong downtrend, people think they're getting in for a discount. So they try to sell from this area right here. So what happens is they'll push down price a little bit to trick people to think that price is going to keep pushing downward. So as you can see right here, price shot down. And then what do they do here? They come in and manipulate the market again. And then they shoot price straight up and stop everyone out that try to get in for a discount. So this is how the big banks make their money. I know a lot of people are looking, or have been talking about like institutional trading. And this is kind of, what you want to look out for, where price is being manipulated. So Stanley, if you're in for a buy position, I think you're pretty decent because, like I said, there's a ton of sellers in odd CAD right now. So if the market makers are going to want to, if they're going to want to manipulate the market, they're definitely going to push it upwards to stop all these people out. But like I said, there's a ton of manipulation during that point in time. So if it was me personally, I'd move my stop loss in profit just in case something weird happens. That way you can get stopped out in profit, and then you can make your way out. But overall, I still think it's going to be pushing on upwards. I don't think it's ready to come down just yet. We also have a buy position, so obviously I'm going to be in a buy bias. So I'm looking, I'm hoping for this price to keep going upwards. But I guess we'll figure it out like in about 30 minutes. 5:53. News is in about 30 minutes for odd CAD. So I think we're good. So yeah, depending on where you're at in this trade, if you're in profit, well, it looks like if you enter the same entry that I gave you yesterday or last week actually, then you'd probably be in profit right now. So I'd probably just move your stop loss in profit if possible. Let's see what else we got here. So we have one more question from MimZ. So is the US 30 one trade a day strategy better for the 5-minute or the 10-minute? So for the 1 day, the US 30 trade that I take once a day is always taken on the 10-minute. That's like my personal preference. So I did a study on it for the entire month of March, from March until the end of April. So on the 5-minute chart, I took a total of 42 trades. There were 4 losses and 7 losses and 4 draws. Draws meaning that I moved my stop loss in to break even or in profit, and then I ended up getting stopped out in profit or at break even. But for the 10-minute chart, the same 42 trades, there was only 3 losses and 7 possible draws. So obviously, I would trade on the 10-minute because there's a higher win rate, but they work for both time frames. So I'll go to US 30, and I'll show you guys the strategy that I've been applying, which has been working pretty good. I don't think we've had any losses for the past 2 weeks now. So I'll go to the 10-minute chart, and let's go back to last week. So I'll just run through this. I'll go through each US 30 trade that I took. So this is the 7th, 5th, so I'll go from the 4th. So the way that this strategy works is you're going to need the K2 indicator because these indicators, these vertical lines, they're based on momentum. So basically what I do is I wait for the market to open, the New York Stock Exchange, and when I get the first signal with this indicator telling me the direction of momentum, then I take the trade because generally the first momentum swing, once the market opens, it's usually going to continue in that direction until market close. So here, I'm going to put the requirements here. I'm just going to put them up even though you guys can't apply, just so you guys can understand, because this strategy is super simple. I just take it once a day, and that's pretty much it. So one a day, let's do once a day US 30. I'll just US 30 daily strategy. So first, identify K2 signal, or no. So that's going to be number 2. So for number 1, wait for New York Stock Exchange open. Identify K2 signal. 3, take entry on close signal candle, and place stop loss at previous swing at I usually have it intervals at 1500, 2,000 and 2,500 pips. And this is super simple. It's like, there's not really much to it to really follow. Okay, so look, so let's go to 630. So, okay, so right here is 630. I'm gonna put a vertical line there so you guys can see. This is 6:30 a.m. New York Stock Exchange opens. So right now, for the first requirement's met, we wait for the New York Stock Exchange to open. Next, you want to identify a K2 signal. So if we go back, I can just replay this just so you guys can see real time. So right here, the New York Stock Exchange open. So what we're doing is waiting for a vertical line to appear. So waiting for it. Right here, we have, this is how you can get a head start. So right here, we have a sell signal, and then the next signal has to be a buy. So basically what we're waiting for is we're waiting to take a buy entry. So we'll wait for a buy signal to appear, or any K2 signal that appears. Okay, so right here, we got a buy signal. And I'm showing you guys it's not real time, but basically if I was trading real time. So right here, we waited for the New York Stock Exchange to open at 6:30. Next, we wanted to identify the K2 signal. So right here, we have a K2 buy signal. And next, you want to take an entry on the close of the signal candle. So once this candle closes, you're going to enter a buy, since momentum is telling you that price is going to be going upwards. So right here, you'll enter a buy. What you want to do is put your stop loss at the previous swing, which is down here. So this swing is about 2,000 pips. So our profit target is 2,000 pips. Our stop loss is 2,000 pips. And then let it run. And there you go, profit target. So, it's as easy as that. So let's see how long it took. We took this trade at about 9:30 a.m. We hit profit target in about 3 hours. So in about 3 hours, you make 2,000 pips. If your broker values US 30 pips, $1 per pip, you could have made $2,000 in 3 hours. And it's that simple. So there goes one win. Let's go on to the next day. So let's just ignore everything else through here. I'm just going to fast forward until 6:30 the next day. Oops. Okay, it's 1 o'clock. Keep fast forwarding it. 4 o'clock. All right, cool. So right here, go 6:30. I'll put another vertical line. So right here, the New York Stock Exchange open. Now, what we're going to do now, same thing we did the previous day. So we're waiting for New York Stock Exchange to open. We've waited, it's open. Next, we want to identify the K2 signal. Right here, we have a buy signal. So the next signal is going to be a sell signal. So now we're prepping to enter a sell. So let's wait for a sell signal. Okay, right here, we got a sell signal. So here, we waited for the New York Stock Exchange to open. It opened. We identified a sell signal right here. Next, we take the entry on the close of the signal candle. So we're going to enter on the close of this candle, which is right here. So I'll enter a sell. The swing is going to be right here, but it's way too close. So I want to give it at least some cushion in case there's some type of retracement. So I'm going to bump that to 1,500. So we have our stop loss set at 1,500 pips, profit target at 1,500 pips. So we let it run. And there you go. See, it's as easy as that, guys. Right. See, this is why I keep this cushion, because if your stop loss was too close, you would have gone stopped out. But like I said, I put stop loss minimum 1,500 pips. So it came up a little bit. I know you might have gone scared if you watched this live, but as you can see right here, shot straight to profit. So again, right here we entered at what, 740, and then profit target was hit in about 4 hours. So like I said, if your broker if they value US 30 pips, $1 per pip, you would have made $1,500 within 4 hours. And I just take this trade once a day. Like, there's no need to stress. Like, wow, you can take more trades. Yeah, obviously you can take more trades, but you know, if you're having steady wins and you just stack these profits, you know, there's no problem. You might as well just keep doing it every single day. And that's what I do. My real money maker is going to be the US 30 because, you know, we rarely lose this. So it just keeps adding and adding, compounding. So let's go to the next day. Actually, we got a question here. So I got a question from John, who's asking, could the same 10-minute strategy be as effective for the rest of the indices? Personally, I haven't done it, so I can't, you know, I can't say because I don't have the data to prove that, you know, it works. Personally, I only use US 30 because it's pretty highly volatile. But I think we did look at it before. It doesn't work the same on the 10-minute. You might, I'm sure it does work, but you have to use it on a different time frame. The difference with those indices are that they're not, every indice, like a lot of people think that indices move exactly the same, but they don't. US 30 only has, you know, the 30 top stocks. It doesn't have very many tech stocks. So if you compare US 30 to the NASDAQ's filled with tech stocks. And that's why sometimes you'll see the US 30 going down and you'll see the NASDAQ going up like crazy because they're two different indexes of stocks. So although you can probably apply it on, you know, S&P or NASDAQ, you probably have to apply it on a different time frame because those move differently as well. You know, US 30 moves way faster than NASDAQ and the S&P. So if you do want to use it on those time frames, feel free to, you know, test it and play around with it. But personally, I haven't done it, and I only trade US 30. So this is what I know how to trade, and this is, you know, this is the strategy that works on it. I'm sure it does work on the other indices, but so once I go through these other examples, because I know there's someone that asked me if I can go over, you know, the whole week. Once I'm done going over these examples, then we can discuss, you know, other pairs. Maybe I can play around with it and find, you know, a good time frame to apply them on. I know a lot of people can't trade US 30 because it costs a lot more. So that would definitely be a benefit, you know, not just to you, but to a lot of the other members that are here today. So let's see. We'll fast forward again to 6. Yeah, someone asked me today to show them how the strategy works because they didn't believe me that it actually works. But as you can see, it's 2 back-to-back wins right there. 2,000 pips, 1,500 pips. I'm not sure if they're in this webinar, but if they are, you know, I'm doing this at your request. So let me keep fast forwarding. Oh yeah, John. Sure. If you don't know how to trade US 30 properly, or you know you don't have a strategy in place like I do, then you know this will blow your account in a few minutes. All right, so right here, market opened at 6:30. So I'll just vertical line right here, 6:30. The New York Stock Exchange opened at this candle right here. So the following candle, we had a buy signal. So we're gonna enter a sell right here. We'll put the stop loss the previous swing. So this is a little too close right here. Probably move it up here. It's at about like 1,700. I'll probably just bump it up to 2,000. You know, why not? So we'll bump that up to 2,000. So we have a 2,000 pip stop loss, 2,000 pip profit. Let me run it. There you go, guys. Another winner. I mean, how easy can it get, right? So right here, same exact strategy. You know, we waited for New York Stock Exchange opened right here, took the first signal right here, enter on the next candle right here, stop loss at the previous swing, which was up here. I rounded it up to 2,000. So even if you had your stop loss at 1,700, you still would have hit profit target even earlier. But I like to round it, you know, to the closest number. So right here, we entered this trade, hit profit target in 5 hours. So like I said earlier, if your broker values US $30 per pip, you made $2,000 in about 5 or 6 hours. Okay, next day. So those 3 back-to-back wins right there, guys. So that's 2,000, 4,000, 1,500. So you would have made 5,500 if you're, you know, like I said, if your broker values the pips dollar per pip, you would have made 5,500 in 3 days. Or if you're trading on Hugo's way, you'd still make a couple thousand, you know, 3,000, two or 3,000, definitely more than 2. So probably 3,000 in 3 days. So 1,000 a day, easy as that. So let me just zoom through this a little faster. I don't want to know you guys if you guys don't want to pay attention to this, but when people ask me to do stuff, I'll do it for you guys. So if you have any questions, feel free to let me know, and I can show you guys. And I'm showing you guys live here. Like this isn't something that I planned out where I can, you know, skew the results or whatever. Like you guys see that this is exactly live, 1 trade a day. So we had a win on the 4th, win on the 5th, win on the 6th. Let's see if we get another win on the 7th. All right, so let's go back to 6:30 market open. 4 o'clock. Okay, so 6:30 was right here. All right, cool. Right here was a buy signal. So if I go back to this, same requirements, guys. Around the open of the next candle. Previous swing is, this could probably be the previous swing, or this could be the previous swing right here too. So I'll just make that 1500. I could probably make it 2000, but I'm just gonna, 1500 is the closest, so I'll round it to that. I'll let it run. And there you go, guys. Another profit target. I mean, I don't know how easier can it get. So we have 3 wins right there. And see how the stop, it came down pretty far. This is why we keep the stop loss. We give it some cushion. We probably could have went for the 2,000 pip move. But there you go. So there's another win. That's 6,500 pips in 4 days. So if you, like I said, that could be between 5,000 and close to 7,000 in profit in just 1 week. Okay, let me run one more, and then I'm sure you guys are tired of seeing this, so I'll just run one more just so that the person asking can see that this actually works. I mean, if you guys have a proper system to follow, you guys can make anything work, really. There's literally like, there's no shit, sorry guys. So there's no limit to possibilities if you have a proper system to follow. Okay, so right here we have this is 6:30. So if the signal is released at the time of the signal, I mean, if the signal is released at the time of the market open, we'd avoid that candle because we want the signals that happen after open. The problem why we don't take the signal when it's on the open is because when market opens, there's a lot of manipulation during that point in time because there's a lot of back orders that have been placed during after hours, and they get dumped right when the market opens. So right here, right when the market opened, price shot down because there was a bunch of short orders, and that's not a valid momentum swing because the problem is there was a bunch of orders that were to be placed and they got placed right at the open. So we'd avoid this candle right here, and then we'd wait until the next candle, which happened right here at 12:20, and then you would have taken that and round that up to 1,500, and there you go, another win. So this entire week, if you just took one US 30 trade, all last week, 1, 2, 3, 4, 5. So 2,000, 3,500, 2,000, so 3,500, 5,500, 7,000, 8,500. So, I mean, I'm just breaking it down for you guys. So 5 back-to-back wins. Total pips was, shit, my counting's off. So I think it was like 8,500. So 8,500. If your broker is valuing US 30 pips, dollar per pip, that would equal 8,500 profit in a week. If you're trading Hugo's way, which is, honestly, I don't know, I think it's like 75 cents a pip, or not even that. So probably 50 cents a pip. I don't want to, give you guys some crazy numbers and you guys are going to come back to me and tell me that I was wrong. But okay, so if you're trading Hugo's way, like most people are, so 8,500 times 50 cents, you'd have made 4,250 in a week, just trading one US 30 trade a day. What was the number again? 250. 250. Profit in a week. And this is trading a 0.1 lot size. So, I mean, that just goes to show, what's possible if you trade with K2. This is my real money maker US 30 because honestly, if I add on to this, so instead of taking a 0.1, so yeah, instead of taking that, 4 times 250, 1,250. So if I want to take that and then I multiply that, I'm taking a 0.2, then I'd have 8,500. If I wanted to, if I had taken a zero, like just we'll go crazy and we'll go for times 5. I'm taking a 0.05, 21,000 in a week. It's easy money, guys. But yeah, let me go back to the questions and see what else. See what else we got here. So Chase is asking for any advice on how to find entry points for majors and minors. So personally, I would just recommend that you have some type of strategy that you follow. I mean, obviously for me, if I'm going to give you advice, I'm obviously going to tell you to trade the to trade the K2 strategy because it's so simple. But I mean, there's a lot of ways to identify a trade. So let me I'm gonna try to think of some type of basic strategy that you can apply. Let's see. So depending on your trading style, I mean, everyone trades a little differently. So not all of these strategies will apply to you. You have to figure out what type of trader you are, and what kind of strategy do you want to follow. But personally, I only recommend taking trend continuation strategies. Any type of trend continuation strategy works perfectly fine. So basically what you could do is, so here's a basic strategy that I apply and that a lot of other people can apply too. It deals with the Ichimoku. So what you can do with the Ichimoku is, so I'll take off the K2 indicators. This is basic for, this is a very, very bare basic strategy. So I wouldn't use this all the time, but it does work. So this is one thing that you can do. So if you're trading like EJ, which is a major pair, what you can do is you just apply the Ichimoku. So this is the Ichimoku indicator. What I do is I turn off, so this is what the indicator looks like normally. It's pretty messy unless you know how to use it. But if you do know how to use it, so I'll just break down the indicator for you guys, just so you guys can see what everything means. So this cloud right here, this cloud is going to show you, the direction of trend. So price is above, it's trending up. If it's below, it's trending down. If it's within, it's consolidating. So this is the cloud. Next, there's these two lines that are here. So the conversion and the baseline. What you can do is you can trade when these lines cross. So if you see the blue line cross the green line, you can take a sell. If you see the green line crossing the blue line, you can take a buy. As you can see right here, this could have locked you in. But this is a very basic strategy. I don't recommend that you use this all the time because it doesn't always work. This is a good starting point so that you can learn the strategy. You can follow the rules that are very basic, and you can make some profit off it. I can't guarantee you're gonna make a lot of profit off it, but it'll definitely, it's a good starting point once you figure out what strategies apply to you. So the way that this works is once this conversion line crosses this baseline, you can take a sell and then ride this down for a lot of pips, 300 pips right there. It's a nice win. right here. Oh, so one other thing, you only want to trade in the direction of trend. So right here, you probably wouldn't have taken this because it's above the cloud. But once it broke below the cloud, you could have entered right here because you did see it come down. So once it broke below the cloud, you could have entered on this candle right here and then rolled this down for, 170 pips. Again, right here, we're only looking for sells because it's below the cloud. So as price crossed through here, you can see the baseline and conversion line cross right here. So right here, this would give you a sell entry. But what you want to do is you want to wait for price to close below the cloud. Because what happens is when price is inside the cloud, it's consolidating. So right here, it broke below the cloud. You can enter another sell right here and then roll this thing down for a couple hundred pips, 100 pips, maybe more, depending on how long you hold it for. And then again, right here, could have taken this, another win. Again, right here, price crossed right here, price closed below right here, and then another win right there. So that's one basic strategy that you can apply. I mean, there's a ton of strategies that you can apply. There's another way to apply this where you don't even need to look for the crossovers, although this is a good strategy. I used to use this strategy for a while back. But if you want something even more basic, because I know this might be a little complicated for you, just looking at so many things at once, what you can do is you can just take off the conversion line. And what you can do is you can trade this when price crosses baseline. So right here, you can see price cross this blue line right here, and it was above the clouds. You can take a buy. So if you take a buy right here, 200 pips right there. Again, right here, price cross the baseline, then it crossed below the cloud, taking your sell right here. Again, right here. So as price crossed above, and then it crossed the baseline, close outside the cloud, another sell right there for a win, crossed above, close below the baseline, another win right there, and pretty much so on. It's as easy as that. But this is a very basic strategy. I wouldn't apply this. If you become a more advanced trader, this is super basic. This isn't always going to work. As you can see here, there's a lot of times where it doesn't work. So right here, price came down, close above. I mean, this could have worked right here if you're going for a small move. 60 pips. Again, right here, it broke below, a win. Broke again right here, another win. This is a good strategy actually. I used to use this for a lot before I created my own strategy. But the thing is, like I said, this is a very basic strategy. You kind of want to incorporate other things into the strategy to prevent anything else from affecting your position. Like for the K2 strategy, we have this trend line down here and this trend meter, and what it does is it gives you the overall trend on 4 different time frames. So you can see where price is trending on how many time frames that you want to look at. So I have it set to 30-minute, 1 hour, 2 hour, 4 hour. So this gives me the intraday overall trend. So down here, instead of drawing trend lines, I just look at the trend meter down here and it shows me the direction of price. So right here it's green, obviously it's trending up. Right here it's red, obviously it's trending down. Blue means neutral, so this means that it's not trending in the same direction on all 4 different time frames. So that's one indicator. Another indicator we have is the K2 momentum indicator. So right here, as you can see, this gives you the direction of momentum. So if it matches, the way that the K2 strategy works is if the momentum matches the trend, then we enter a sell position or a buy position. Right here, these match, but this is a bearish candle, so this isn't a valid entry. Right here, we have a sell signal, and it matches, so you'd enter this. And then you put your stop loss at the previous swing, which would be like way up here. So this is on the 4-hour time frame. We usually trade this on the 30-minute. So if you were trading this on the 30-minute, like I said right here, you just match the color. So if it's red and red, you enter sell. So if you enter the sell right here, you could have won right here for 20 pips. You can take it again right here. Again for another 20 pips. And this is just another strategy. I mean, there's a ton of strategies you can apply depending on your type of trading personality. You might not be a trend continuation trader. You might be a price action trader. It's just really up to you. And you should definitely try as many strategies as possible just to figure out what fits you best. But yeah, these are available if you want to subscribe to K2. As you can see, it's super simple. You just match colors. You match colors, you can, you know, trade pretty well. But let me go through another question. So let's see. Bobby is asking, would S&P work with the strategy? So like I mentioned earlier, the 10-minute strategy that I use for indices, that only works for US 30. I'm sure it works for S&P too, but here, let's just open S&P so I can run it on there. I know we ran it last time and it didn't work as well on the 10-minute, but I'm sure it would work if you applied it on a different time frame. So let me take everything off the chart. Let's go back to 6:30. All right, so 6:30 was right here. And one thing too is I don't understand. Well, I personally don't know how pips work with S&P compared to US 30. So with US 30, I have the stop loss requirement set to 1,500, 2,000, 2,500 pips. I'm not familiar with how S&P is set, so I don't know where to place the stop loss. But as you can see right here, I'm going to apply the same exact strategy. We started to look at the chart once 6:30 hit, once the New York Stock Exchange opened. And next we look for the first K2 signal. Right here we have a buy signal. So we enter on the open of the falling candle right here. We put our stop loss at the previous swing, which is, let's see, right here, I guess. So 240. So 240 pips. And as you can see, it hit right there. So if you did apply the strategy for S&P, you would have won today. So let's see yesterday. So, oh, sorry, guys, this is a 30-minute chart. Let me go to the 10-minute. Maybe it works on the 30-minute because it hit perfectly right there. But, I mean, we can mess around with it and figure out what works and what doesn't. All right, so let's see. We got the, actually, it works perfectly here too, it looks like. So right here was 6:30. This is when the market opened. This is actually from yesterday. So this is on the 11th. 6:30 was right here when the market opened. Next, we wait for the next signal. Right here, we got a sell signal. So we enter a sell right here. Stop loss is, it looks like this is too tight because it's only 64 pips. I don't think that's very much. Because on the last example, it was like 240 pips. So I think matching this with US 30, it'd probably be 150, 200, 250 compared to the US 30, 1500, 200, and 2,500. So let's just put this at 1,500, at 150 minimum. So as you can see right here, if you took this trade, you came straight down and hit TP. Let's go again for today. So today was the 12th. 6:30 right there. You can see the first candle right here was a buy signal, and it didn't go as planned. And this is why I can't confirm that it works on the S&P. So, this wasn't as easy as it was on US 30. So this would be a loss. Let's go over here. Let's just go through this whole week, and actually let's start from the previous week, and then we'll see how the win percentage works. And if it's not that great, then we'll switch to a different time frame. That's pretty much how we could figure it out, just through trial and error. So let's go to 5, 2, 4. I think the 4th was Sunday. Okay, so this is Sunday. Actually, no, the 4th was 3rd was Sunday. The 4th was Monday. Okay, so let's mark this up. 6:30 is right here. So here's the 6:30. This is when the New York Stock Exchange opened. We're going to look for the next entry, the next signal, which is right here. So we're going to enter the open of the falling candle, which is right here. We're going to put the stop loss at the previous swing, which is down here. So we'll round that to 250 because, I usually like to use round numbers. So there we go, hit TP right there. So on the 4th, that's a winner. Let's check the 5th now. So the 5th, 6:30 right here. So on the 5th, the first candle is right here. So we enter on the open of this candle. Looks like price pulled up pretty heavy. So let's see how far, for stop loss can handle this. So, I mean, depending, like I said, I'm not familiar with S&P, so I don't know how the pips work. But if it was at 150, you would have lost this trade. If it was at 200, you would have made it. You would have won this trade. Maybe the sweet spot is 200 for the stop loss on S&P. I'm just not familiar with it, so I don't know, how to gauge stop loss and positioning. So right here, this was a win. This might have been a loss, might have been a win, depending on where you put your stop loss. I'm not familiar with it. So if you're more familiar with S&P, then you could probably figure out a way to get this to work. But it looks like it works pretty much. I mean, it looks like all we need to really do is adjust the stop loss, a few more pips, and then it'd be perfect. Let's go to the next day. So 6:30 was right over here. So this is 6:30 when the stock market opened. Right here is the first signal for a sell. So we enter on the open of the falling candle, which is right here. We put the stop loss at the previous swing, which is right here. 275. So if you took this trade, this would have been a winner. So one winner, one maybe, another winner right here. Let's go to the next day. I mean, it looks like it works. There might just be like little difference, like little things that you could change to make it work better on S&P. But for the most part, it looks like it does work. So right here, we entered on the, this is when the stock market opened. So this is the first candle right here, enter sell. Previous swings right here, but it looks a little too close. So the closest would be 150. So 150 for prop target, 150 for stop loss. There you go, another winner right there. So there goes your winner for that one. Let's see, we'll go to the 8th. 6:30. Stock market open right here. Like I said, we don't take the signal if it's on the open due to possible manipulation due to orders coming in as soon as the market opens. So we take the first signal, which is right here. I mean, it's pretty simple. It's just same thing over and over again. There you go for another winner. So let's go to the next one. And that pretty much goes for the entire week for that week. So the 10th. The 10th was, I think this was Sunday. And then this was Monday. So actually it works pretty well. I mean, just going over these, these specific trades, there's only one maybe win or one maybe loss, but everything else hits. So this has been straight winners as well. So I guess it does work on the 10-minute. Personally, I don't trade S&P, so I can't give you, 100% confirmation. This is probably something that you need to figure out on your own. I can probably help you with it, but give you a guideline of how to trade it or how to set up your rules. But personally, it looks fine. So there was 1, 2. So there was 5 trades last week. So 5 trades. Out of those 5 trades, 1 was a maybe. And then this week, it looks like this first trade would have been a loss. But I mean, if you have 6 wins and 1 loss, I mean, so each win was about 200 pips, give or take. So 5 times 6, you have 1,200 pips there for S&P. You have 1 loss for what, 1,500 pips or 150. So at the end of the week, you still have, or not even the end of the week, but you still have a pretty good amount of pippage for S&P. I'm not sure what the valuation is for S&P. I'm sure it's worth a lot. It might not be $1 per pip, but it's probably going to be around 50 cents to 25 cents, which is still not bad. So if you multiply that by 50 cents, you still would have made $525 just trading S&P once a day. But let's see. Okay, so CT said S&P might be better to look at 10:30 reversal moves. So first trade after that. Oh, okay, cool. So I didn't know that, but let's put down my notes just for ACT. Does that work only for S&P or is that for like pretty much all indices? I'll write this in my notes because I'm going to back test that. CT said bigger the better. Gotcha. Okay, cool. They said since holding more stocks is a wider sentiment. Yeah. I noticed that during lunchtime too, like that's usually where they sell off. So during that time, I usually don't take any buys, once we hit like 12 noon. Because I noticed that once it hits 12 noon, people go to lunch, people start selling off pretty much all of their stocks, specifically the intraday traders. So yeah, what CT said was around 10:30. So if we waited for 10:30, it looks like it might have been too late for this one. So let's go to this one over here. 10:30. Actually, yeah. So this would have lined up with this trade as well. It's perfect right here. So this would have been a winner. Same trade that we would have taken if we were doing 6:30. Yeah, because sometimes you're not going to get a signal until, like way later. That's kind of what happens like when you catch the reversal later on. So that's if you trade at 10:30. That would have been a win for 200 pips. Let's see, previous day. So wait till 10:30. So this is 10:30 right here. We would have ignored this signal candle because it's a sell signal, but it's a bullish candle, so it's not a valid momentum signal. In order for it to be valid, it has to be a bullish candle with a bullish signal or a bearish candle with a bearish signal. So right here was 10:30. We would have skipped this candle because it's not valid. Would have taken this one right here. And it's opposite candle. So if we took that one right there, so you could have taken this one over here if you took, the 10-minute one right, from market open, or right here at 10:30. This is the past 10:30 one. So right here, if you took this trade, maybe 150 pip win because the previous swing is right there, and we're just going to overextend it a little bit, or we can even bring it down here. Depending on how you interpret the market, this might be the swing to you. This might be the swing. This looks like the actual swing because it doesn't look like it really bounced off from this price right here. So this would probably be around 200 pips. Yeah, nice. So there's two back-to-back wins right there. So win, win. It looks like for today that'd be too late to take it. So we wouldn't have that trade for S&P today, but we do have one for the previous day. We have one for Monday. Let's keep going back a little farther. Right here on the 7th, let's go to 10:30. So 10:30 hit right here. So we're taking the next signal, which is this one right here. And CT's on point with this one. I'm gonna have to start using this for the US 30 as well. All right, there we go. So we previous swings right here, but like I said, that's too close. We're gonna push it up a little farther to 150 pips. Oh man, CT might be onto something. Look at that. Another winner. So yeah, guys, if you guys want to apply this on the S&P, it looks pretty nice. So right there, another winner. Right here for May 6th. So let's move to 10:30. All right, so 10:30 is right here. Personally, I would skip this candle because, like I said previously, I don't like to take trades when I start looking. So I would have skipped this one. And I mean, it looks like that, that's a perfect idea because right here, if you took this, you would have lost. But if you took this one right here, you would have won. So since we're starting to look at the chart at 10:30, we're only taking trades after 10:30. So this is 10:30. This is the first candle right here. Previous swing is probably right here. It might be right here. It might be right here. So I'll probably put it up here, 200, round it to 200, even though it's 211. And then again, another win. So S&P actually looks really good after 10:30. I mean, you can take both trades. You can take the one from open or you take the one from 10:30, same thing. They look like they both hit pretty well. So right here, this is the 10:30 mark. So we enter this one right here. Looks like this might have been, let's see. Yeah, stop loss is too close right here. So 150. Yeah, if you took this trade right here for 150, it looks like it would have been a loss. So that's one loss. We still have straight win. So actually leave that up there. I'm just gonna keep this here so we have some type of documentation when I come back and I add together. It's just one right there. Let's go to this day. So this is on the 4th. Delete this. Wait for 10:30. So 10:30 was right here. The next candle following it was a buy signal. So we'd enter on that one. So right here, looks like this is the previous swing, which around at 200. It's a straight winner. So right there, another winner right there. Is there any other days previous? No, so that looks about it. It had the same exact results, or not exactly, very close. Pretty much 6 wins and 1 loss, which was this one right here. So both strategies work. I mean, if you want to apply this on S&P, it looks like it works perfectly. If you want to do from market open or at 10:30, looks like they both hit pretty perfectly fine. You can even take 2 trades if you want to take one for market open, and then take a second one past 10:30. Once price might be reversing, then you can have double win one day. Let me go to the yeah, that was a good tip, CT. Thanks for that. Let me go to US 30. I'm gonna see if that applies on there, because if that works there, man, then I'm gonna start using it for myself as well. All right, so here 10:30. So actually, yeah, this trade would have entered at 10:30 anyway, so that same rule would have applied there. See on the 12th. 12th at 6:30. So this is 6:30 right here. I would have entered this one, so this would have been a winner right here. Oh yeah, this is the trade we took today, of course. So this would have been a winner, and then if we waited for 10:30, that'd be too late. I would end up taking one down there. Generally, I like to trade within within the market. I don't want to go once markets close, because that's when price gets slow, and there's not enough volatility to get in and out of trades within a good period. So let's go to the 11th right here. So on the 11th, if we took the market open trade that I've been doing, this would have been a winner right here. So it'd be a winner for 1,500 pips. But let's go and see where it places at 10:30. So if I took this trade, I would have won 1,500 pips or whatever. And then again right here, this is 10:30. So this is the next candle right here. So I could have hit it both ways. Could have bought right here, won 1,500, 2,000 pips. Take another one right here, another 1,500 pips. Man, thanks, CT. I'm definitely going to be using this. It's a lot of money right there. All right, cool. So yeah, if I started playing that strategy, I'll have 2 entries instead of 1. So that would have been 3,000 pips in one day. If you're trading, dollar per pip, that'd be 3,000 in one day. Let's go to the previous day, right here. So the previous day is going to be, oh yeah, like I said, this was past 10:30, so that'd fall within that time frame. Again, right here, this would be a winner. But then let's check at 10:30. So this is 10:30 right here. Take the next signal. Back-to-back wins. Again, right here. Another 1,500 pips. The only problem with this is that this happens after market closed. So personally, I might have not taken this, but I might start taking it again, because if this works, then why not? I'll take the first trade after 10:30, and then the trade in the morning. We got another one right here. So entry, obviously this was a win, so we'll fast forward to 10:30. So 10:30 was right on this candle. Like I said earlier, this isn't a valid candle because it's a bearish candle for a buy signal. So we're going to take the next one, which is this one right here. And what do you know? Another winner. So instead of making 1,500 to 2,000 pips a day, I could be making 3,000 pips a day. So I'm definitely going to start incorporating this to my US 30 strategy. So there we go. Another winner. Again, right here. Obviously, as you know, that's a winner. Here is the 1030 mark, or no, 1030 marks right here on this candle. This is not a valid candle. Plus, it's on the 1030 mark, so we wouldn't have entered that. We would have entered this one right here. So if you took that trade, there you go for another 1,500 pips. Man, this is crazy. Yeah, this is insane. So this is what happens when you link up with a stock and futures expert like CT who knows how this market actually moves. I don't even know how this market moves. I was just playing with it and I saw that this strategy worked. And here goes CT giving me another tip, and it's crazy. It works amazing. So again, right here, this is the 1030 candle. We have a buy signal. Enter another buy right here. Jeez, okay, again, 1,600 pips. So these are two back-to-back wins every single day. It's over 3,000 pips a day just taking two trades. I mean, can it get any better? It's like you don't even have to stress about anything. So you're only taking two trades a day, and you know they win almost every single time. I think that's about it. So that's about it for the ones that I looked at. But this is amazing. Like you guys see for yourself real time. This is like 3,000, more than 3,000 pips, like 4,000 pips, another 4,000 pips. Geez, let me just do the math on that, guys. So if there was seven trades, so like 4,000 pips a day times 7 trades, you have 28,000 pips in 2 weeks. If your brokerage is providing dollar per pip valuation for US 30, then you'd make 28,000 in 2 weeks. Or if you're on Hugo's way like me, and then you multiply 28,000 pips times 50 cents, you'd still make 14,000 in 2 weeks. That's insane. Yeah, I mean, that's crazy. I'm definitely going to be doing this tomorrow. And I should be doing it right now. Is there any, did I miss a trade for today? Okay, so here's 1030. I mean, there was a buy signal right here, but this is pretty far off. Like the market's been closed for a long time. So I probably wouldn't have taken this trade. But who knows, maybe this is a reversal right here. But yeah, it's definitely good to know. So I'm going to write down all these notes that CT gave me. Yeah, Mims is right. It seems like there's less drawdown with the 1030 because it seems like in the morning once the market opens, there's still some manipulation going on because there's price going in both directions, and then sometimes it'll give a false signal. Like right here, like let me see. Yeah, like around this point in time, like from 10 to market close, there's a lot of false signals that are going in both directions. So it might be hard to spot, but it looks like the 1030 strategy does work pretty well. So I'm gonna put that in my notes, and I'm definitely going to be applying this. Let's see what else we got here. We'll go down the questions again. Yeah, so CT said 930 to 1030. Yeah, that sounds about right. Let's see if there's anything at the 930. So, I mean, regardless, this would have hit at 930. See if there's another one over here. That'd fall within the time period. Actually, you could have taken that trade too. So there'd be another. Actually, no, this candle closed on the 930. time, so we probably wouldn't have taken that trade. Let's see, 9:30. 9:30 is right here. This is an invalid signal because it's a bullish candle, buy signal with a bearish candle. Again, this is an invalid entry because it is a sell signal with a bullish candle, and then same with this one. So we'd ignore these three candles right here, and we'd still end up with the 10:30 candle. So another winner there. You know, honestly, I'm trying to figure out where it doesn't work, so we can base it off that, and then we can figure out how to fix that. So let me go again here to 9:30. This is 9:30 right here. Actually, this would be another winner. So this would be a winner if you're taking the 9:30 strategy, and another winner if you're taking the 10:30 strategy. So honestly, this could have been 3 wins right here. So 1,500, 1,500, 1,500. Jeez, it's a lot of pips. Let's see. There's another one here. So this is the 9:30 time zone. I'm not time zone, but candle. We would have skipped this candle right here because it's an invalid signal candle. And then we would have taken this one, which would have fell with the it would have fell with the 10:30 entry. That's about it. Yeah. So yeah, if we incorporated the 9:30 entry, there'd be even more wins. So we could have in some situations 3 wins in one day, which is insane. Let's see. Mim's asking my time zone. My time zone is Pacific Standard Time. So 6:30 for me would be, if you're on Eastern, then that would be 9:30. Or if you're, I mean, depending on where you're located, you can just base it off the Pacific Standard Time. Also, Mims is asking if S&P or NASDAQ strategy would be good for for little bros. Yeah, no, for sure. Like I said, like we went over the S&P earlier. Let's go back to it again. So like I said, it does move a little different. It does move the same, but it doesn't always move the same. But if you're applying the strategy here, it looked like it worked pretty perfectly fine. Let me look at the 10:30 to see if it works. I think we already looked at, we applied it on the 10:30. So it looks like it works perfectly fine on this one too. But let's see the 9:30 to see if that works a little better. So 9:30 was right on the signal candle, so we would have skipped this one, would have taken this one. Same thing, falls in with the 10:30. Again, right here, this is the 9:30 candle falls within this one. So looks like if you took this one right here, you would have won. But yeah, this was the one loss that happened. 10:30 and 9:30. Right here, we have the 9:30 candle. It was a buy signal, so this would have been a loss. Looks like it's not as accurate on the S&P. It worked pretty fine on the US 30, but let's see. So right here is 9:30, so we would enter on this candle right here. Actually, it looks fine. I mean, if you take all of these trades, your wins are gonna heavily outweigh the losses. So I think you'd be fine. So if you move this to 150. So this would have been a win. This would have been a win. Both wins on that. 9:30 was right here. We would have avoided this candle. It would have fallen with the 10:30 entry. Again, right here, 9:30 was around here. Entered on this candle with the 10:30 candle. Both winners. All right, and on the 12th, looks like. So if we, yeah, on the 12th, if we entered on the 9:30 candle, which was, so this is 9:30, the entry would be right here. Winner. Yeah, so I think you can first you can base it off the first entry if there's no trade that occurs within this. Actually, this would, I think we're better off just basing it off the 930 actually, because it looks like the 630. So if we took the 630 on this one, we get a false entry right here, and then we would have lost. But if we waited for the 930, we would have taken this candle right here, and we would have won. If we waited for the 1030, then we wouldn't have. It would have never triggered. But this works perfectly fine. Let's see what else. If we have any other questions here. Kenton is asking, what time is 10:30 for UK guys? Let me see if I can pull this up right here. Let me see, time zone. PDST, UK. I had this chart open earlier. All right, cool. So Kenton is asking, what is, let's see, so what time is 10:30 for UK guys? So 10:30 for me would be 10:30 for me is going to be 6:30 p.m. for you guys, London time. So it's not bad. I mean, you guys get enter trades. You guys can apply the same exact strategy because the U.S. stock market opens right here at 6, and we only really trade until midnight your time in the UK. So that gives you a perfect window to take these trades. So yeah, I mean, that's pretty good because, and then you can trade Forex once it gets nighttime. But yeah, so 10:30 my time is going to be 6:30 your time, Kenton. This is Pacific Daylight Savings Time too. So depending on if you guys follow daylight savings, I'll just be an hour ahead. So this should be proper. Let's see what else we got. So Bobby is asking tea time. Yeah, so let's see. Bobby's asking what time 10:30 for Central. I think Central is only an hour ahead. So let me add a time zone, Central. Hey Bobby, are you guys on daylight savings time too, or are you non-daylight savings? I'm not sure if your state does daylight savings. Looks like, okay, so daylight savings. So CT says that too. Yeah, 10:30. 10. I'm not sure if this is right. CT says it's no 2-hour difference to Central. Yeah, so my time 10:30 looks like it's 12:30 p.m. for you. I'm not sure if this is right. Okay, so CT, yeah, pretty much. So I guess it's 12:30 your time. It's only 2 hours ahead. There was another question here. Tatenda is asking, can I survive US 30 drawdown with a $500 account? Probably not. I mean, you probably could, but it's really pushing it. Like you're gonna be pushing it to like your last dollar, and if it just spikes farther, past that direction, you're gonna get stopped out before it, pushes up to profit if it happens to retrace that far back. So personally, Tatenda, I would probably have at least 1,000 just to survive the drawdown. And as you can see, going over the strategy, it has a very, very high win percentage. So if you're able to eat the drawdown, you should be fine. But let me go to US 30 over here. Or if you can't, just trade S&P. S&P is a lot cheaper than US 30. and as you can see by going over the back test, it works just as good. But like I was saying over here, there was some trades that we passed through where they were really deep in drawdown. So I don't want you to go and enter that trade and then you get stopped out before it swings in profit. So let's go. Let me see if I can find it somewhere around here. Yeah, so this right here. So right here, Depending on your broker, this went into 1,352 pip drawdown. So if your broker is valuing US $30 per pip, your account would have been blown at this point. But if you were even on a Hugo's way account, so 1,300 times 50. So you'd still need at least 650 to survive this drawdown right here to Tenda. So this is like one of the reasons why you need you need to have at least 1,000 in your account, because you just need to survive this drawdown. Because look, as price pulled back, and you know it would have been a little risky. If you just held on a little longer, you would have hit profit target. The key here is just to survive the drawdown, because there's almost zero to no losses here. There's like very little. I think there was only one loss here, and I think it was like barely touched it before it. Actually, I don't even know if there's any losses for US 30. I know there was a loss for S&P, but I don't remember if there was a loss for US 30. I don't see anything here. So yeah, literally no drawdown. I mean, there's one drawdown on that one trade. Everything else looks perfectly fine. Yeah, I don't see any other questions. So if you guys have any other questions that you guys want me to go over before I could get off, feel free to let me know right now. It's about 7 o'clock, so we've been on this call for about 2 hours and a little over 2 hours. But if you guys do have any questions, feel free to let me know. And if you guys don't have the questions now, feel free to just message me on Telegram or put it in the public chat, and I can answer your questions. Let me see if there's anything else here. Mims is asking, so the 10:30 strategy is for Pacific Standard Time. Yeah, so pretty much it's the same thing as the 6:30 strategy. It's just you know, at a later time. Usually the trades don't even hit until that time anyway, so it kind of falls within that requirement. But like CT said, like that's usually the time, you know, when the price starts reversing. So it might be better to just wait for that time instead of taking, you know, the very first signal. Because even like this trade right here, this trade went into like some pretty deep drawdown right here, which could have freaked some people out like myself. Yeah, this was like literally right next to the well, it came up here. So what happened? Personally, if I was trading this and it came all the way up here and I would have been profit, you know, well over 1,000 pips, I knew my stop loss right here, so I would have gone stopped out. But the good thing about this strategy that CT mentioned is that once I got stopped out here with 1,000 pips, I could just re-enter down here, and it would have worked perfectly fine. So that's like one thing you can do. You can try to go for the 6:30 strategy, and then if you get stopped out in profit, go ahead and, you know, hit it again at 9:30 or at 10:30. And you know, you'll have multiple entries that way. But yeah, man, it was great. I'm definitely going to be applying this tomorrow because this has been a rocky week so far for the most part. But yeah, guys, I don't have any other questions. So if you guys have anything else, feel free to message me on Telegram or put in the chat, and then I can go over your question. Otherwise, I'm probably going to get off soon, grab some dinner, and then I'll probably look at the charts for the next entries. Mim said 10:30 strategy is better. Oh yeah, no, for sure. It's been a hassle for me waking up at 6:30 every morning. Well, I wake up at 5:30 because I have to, you know, analyze the charts prior. But yeah, no, definitely. I'm probably gonna start using that more than the 6:30 one. CC said 9:30 rolls and lunch. 9:30 is to secure. Yeah, risk. That's the best part. Once it's risk free, it's like, man, you can relax. You don't have to worry about anything. But yeah, like right here there was some drawdown, but if we waited for the 10:30, like literally no drawdown, straight profit. 10:30, yeah, 10:30 Pacific Standard or Pacific Daylight Savings Time. But you can, I mean, you can match it with whatever time zone you're in as to, you know, what time the stock market opens. Oh yeah, 1:30, yeah. You guys are 3 hours ahead, so you guys should be good. But yeah, guys. All right. So I think that answers all of the questions. We have this for all the new attendees here. We have this every Tuesday and Thursday. Aaron might start doing it on Monday and Wednesday, whenever he decides to. But otherwise, I'll be doing this every Tuesday and Thursday. So if you guys have any other questions or you guys want to come back on here in the future, feel free to. CT said, "Don't tell Felix." You might get offended. Yeah, I agree. Yeah, especially for shorting indices, because he likes doing stocks, so he's always going to be buying. But yeah, guys, it was a great live trading room. We didn't really do any live trading, but a good trading webinar overall. So if you guys have any other questions, feel free to reach out. Otherwise, this will be on YouTube later if you guys want to rewatch it. All right, guys, I'll catch you guys in the chat. Talk to you guys later.